Next topic is stock exchange. Stock exchange, or you can call it as a secondary market. Fine. So what stock exchange is? Stock exchange is an institution which provides a platform for buying and selling of securities, and or you can say that it facilitates the exchange of securities between the investors. Right. So, according to Security Contract Act 1956, how this act defines stock exchange. According to this act, a stock exchange is an association, organization or body of individuals, whether incorporated or not, established for the purpose of assisting, regulating and controlling the business of buying and selling and dealing in securities. Fine. So it is a market established for the purpose of assisting, regulating and controlling the business of buying and selling of securities. Fine. The first stock exchange in India, right? The first stock exchange in India was established in 1875 and it was named as the Bombay Stock Exchange. It was further, the further development was the second establishment of the second stock exchange was established in Ahmedabad in 1894, then in Calcutta, then in Madras in 1937. You will notice one thing, that all these four places, they were the major centers for the trade and commerce. So a stock exchange was first established in Bombay, then in Ahmedabad, Calcutta and Madras, where majorly all the trade and commerce activities were taking place. Until the early 1990s, the Indian secondary market comprises regional stock exchanges with BSE, Bombay Stock Exchange, fine. But after the reforms of 1991, the Indian secondary market acquired a three-tier form, fine. Bombay Stock Exchange, regional stock exchanges and All India Stock Exchange, fine. It comprises NSEI and OTCEI, National Stock Exchange of India and Over-the-Counter Exchange of India. Fine. These are the various functions of stock exchange. The first one is the barometer of the economy. A stock exchange is a barometer of the economy, as the price of the shares, they indicate, or you can say the share price index, that is Nifty or Sensex, that indicates the economic status of any economy, any country, right? So stock exchange basically provides a market where we can buy and sell the securities. So this process of this process of reinvestment and disinvestment basically provides through this particular process the savings of the investors. The savings of investors, they are put indirectly to the most productive usage. For example, if any investor is buying shares of a particular company and that particular company is getting some amount received from that investor, so indirectly the amount which is invested by the investor in that particular company is being utilized for the capital formation purpose and hence indicates the economic growth. Fine. Valuation of securities. The second point is the valuation of securities. Securities of reputed and the growth oriented companies. The securities of the companies which have a high market share or which are growth and profit oriented, the prices of such companies, they are high, right? They are high because of the high market share. And why and how market share raises of any company? It raises by or through the performance of a company. Fine. So if any company is having the high prices in the share market, that such valuation, why such valuation is required? Such valuation is required means why investor need to know that shares of which particular companies are high or low in the share market, right, or at the stock exchange. Fine. Such information is required or needed so that the investors can, can decide that where to invest and where not to invest, so that they can make a wise investment decision. Fine. And a stock exchange also tells about the credit worthiness of any company, right? The prices generally in a stock exchange are determined by the forces of demand and supply. As I just told you that any company which is indicating, which is showing the high price, right, that means that that company is in demand, the demand of the share of such company is high, and vice versa. On the contrary of that, if a company is not performing well, right, the share of that particular company or the price of that particular company, or share of that particular company will be low. So investors, they won't like to invest in such company, hence the demand of shares of such companies will be less, and therefore the price of the share of that company which is not performing well will be low. Fine. So the prices on the stock exchange are determined by the demand and the forces of demand and supply. Fine. Third point is ensures safety of transactions. Fine. Whatever transactions we make, means the buying and selling of securities in the stock exchange, right, these transactions are considered to be safe, right? Safe. Why they are considered as safe? Because only listed securities are traded in stock exchange. Only listed securities, they are traded, and a company gets listed. A company is listed in a stock exchange only after the verification of its financial and non-financial aspects, right? Or you can say according to the legal framework of SEBI. Therefore, the investment in stock exchange, investment in the share or any kind of transaction in the stock exchange, right, that is considered to be safe and secured. Fine. The fourth point says stock exchange provides liquidity and marketability of existing securities. Fine. A stock exchange is a platform where we buy and sell previously issued securities. Fine. The securities which have already been issued, shares or debentures. Fine. So stock exchange provides a ready market for the buying and selling of good, or you can say the reinvestment and disinvestment of securities, right? Hence, anytime you can convert the share of a particular company into cash. So stock market provides a ready market for buying and selling. So if anytime you can purchase the share, and anytime when you require cash, you can sell the share to any other investors, right? So there is a high liquidity and marketability provided by the stock exchange. The next point, the fifth point, says that stock exchange provides an optimum use of capital. Fine. As we had already discussed, that stock exchange or secondary market, they don't help in a direct capital formation, but they help in indirect capital formation, right? So the shares generally of profit or the growth oriented companies, they are high, right, and they are sold at the higher price. For example, if a company is having a very good reputation, fine, or a good reputation, or they are listed in a stock exchange, and that has been providing good return to their investors, fine, because of that position, because of that reputation, fine, they can utilize that reputation to further raise more capital from the primary market or the capital market. Fine. How? Because their market share is high and their stock position at the stock exchange is indicating their credit worthiness. Fine. The 6th point says that stock exchange